Hello everyone, my name is Dan, and in this video I will share with you how to identify breaker blocks with ease using SMC and ICT techniques. So let's get right into it. Alright, so you might be asking yourself, what exactly is a breaker block? Essentially, a breaker block is a failed order block that occurs when the market shifts structure after a liquidity sweep. So right here, I drew some examples that I wanted to share with you. The first example is when the market is in a downtrend. We know that when the market is in a downtrend, it moves in a series of lower lows, lower highs, and lower lows. Okay, we create a lower low, then the market retraces, we create another lower high, and then from that lower high, we break structure to the downside and we create a lower low. And right here, we have a supply level or a order block. Okay, and once the market shifts structure and breaks this lower high and creates a new higher high, we essentially have a failed supply level or a failed order block. That is our breaker block. So after the market shifts structure, after it has a liquidity sweep right here, okay, below this low, we can see we have a liquidity sweep, and right after we have a aggressive break of structure to the upside, creating a higher high. All right, and this becomes a breaker block because, like we said, it is essentially a failed order block that occurs after the market shifts structure, of course, after a liquidity sweep. First, we have a liquidity sweep. After that, we have a break of structure to the upside. Okay, so essentially we have a shift in market structure. Okay, and then this is our breaker block because it is essentially a failed order block. Okay, and now let me quickly show you an example on USD CAD on the M15 time frame. Of course, you can identify breaker blocks on any time frame, but for this video, I'm just going to use the M15. So right here, this is recent price action. Okay, this is literally from yesterday. Let me use the bar replay real quick. So check this out. Right here, we can say that we have a intraday downtrend. Okay, we have a lower low. This is a lower high. Okay, we can also mark them down if we want to. So we have a lower low right here. Right here, we have a lower high. Okay, and then we created a brand new lower low right there. Let me quickly clone it so we can mark it as well. Boom, lower low, lower high, and lower low. Clearly the market is in a intraday downtrend. Now we can mark our order block or our supply level, which would be this one right here, very clear. Okay, and let's see what happens. So check this out. We have a liquidity sweep. Okay, a very clear liquidity sweep. We could say we had a liquidity sweep here or a liquidity sweep here, and after that we have a break of structure right here. Okay, very aggressive, you can see. So essentially this is now a failed order block or a breaker block. Okay, this right here is our breaker block. Let's quickly note it down and let's see how price reacted to this zone. Okay, so let's play price forward and boom, check this out. We had a great reaction to this breaker block, and you could have entered a long position right here. You could have placed a buy limit on this breaker block, stop loss right below it, and you could have aimed for this high right here, and this would have been a very nice 6-hour trade almost, okay, using this breaker block technique. So once again, lower low, lower high, lower low, price is in a downtrend. After that, we have a liquidity sweep followed by a change of character, basically, because we broke this lower high right here. And after that, this becomes a failed order block or a breaker block. And then we can see what a reaction the price had to this breaker block. Okay, so now let's move on to the second example. But before we do, I also wanted to let you know that if you guys want to see the SMC trades I am taking every single day, you should go ahead and join my group on Telegram. It is the first link down below. So let's get into the second example. This one is this one is a I would say a bullish breaker block. Okay, because essentially this is a bullish order block that failed. Okay, or a demand level that failed. So when price is moving upwards, it is basically in a uptrend, moving in a series of higher highs, higher lows, and higher highs. Okay, so once we have a liquidity sweep right here, followed by a change of character, because we break this higher low right here, okay, then we have a failed order block right here, or a failed demand level. And this is our breaker block. Okay, this becomes a breaker block, and then price could have a reaction on it. So for this example right here, I'm going to use NAS 100. So let me quickly go ahead and go on the NAS 100 chart and show you guys the example I'm talking about. Again, this example is very, very recent. I think it's actually from today. Yeah, it is literally from today. So let me quickly show you what I am talking about. Okay, so check this out. This one isn't as clear, okay? So right here we can see that we have a high. Of course, this could be a lower high. We could say, I mean, essentially this is a higher low, right? Because we had a higher low here, then we created a higher high, breaking this structure right here, moving higher. Okay, so this essentially could be a higher low, but within this structure we create some more structure, okay? Because we could say that this is another higher low, and we can see that we have a very small break of structure right here of this high, okay? Let me zoom in so you guys can see it clearly, okay? We can see that this high right here got broken by this wick, okay? So we have a higher high, and the point of origin of this move was this demand level right here, or this order block, okay? So now let's play the price and see what happened. The reason I choose this example is because it's recent, okay? I can go back in time and cherry pick a very picture perfect textbook example, but I don't want that, okay? I just want to use current price action. So let's play the price. Boom, check this out. We first have a liquidity sweep, okay? And after the liquidity sweep, we have a break of structure, okay? We have a change of character because we break this higher low right here. Okay, we break this higher low right here very aggressively, and this becomes a breaker block because essentially it is a failed order block or demand level. Okay, so this is our breaker block, and then we could place a sell limit on it if we want to. Okay, we could place a sell limit on it. Stop loss would be right on top of the zone, and then take profit, it is up to you, really, okay? Take profit, it is totally up to you. You could aim for liquidity sitting below this wicks for a very nice 8R. And let's just see how this plays out, okay? Let's play price. Okay, boom, check this out. We have a reaction to our breaker block. And as we can see, this was a take profit. All right, so essentially, being able to identify these breaker blocks could give you some entry opportunities, okay? So I would highly suggest to go on a random chart, doesn't matter the pair doesn't matter, the time frame doesn't matter, and try to look for some breaker blocks, okay? Some bullish breaker blocks or bearish breaker blocks, doesn't matter. Try to spot them because, like I said, this can be a very cool concept for you to use, because essentially when we have a market shift, okay, or a change of character, you could look for these breaker blocks to have a possible entry point. And then from there, you can do what you want. You can either place a sell limit or buy limit like I did in this video, or you can even go more in depth. You can go on a smaller time frame and get a more refined entry if you want to. That's something that you can also do. You can go on the smaller time frame and get a refined entry, and because of that, you can get a much higher risk to reward ratio. But of course, there's pros and cons for both. If you're trying to do that, you will have a smaller win rate, but of course, the risk to reward will be huge. And you also have to spend more time in front of the charts. Whereas if you just place a sell or a buy limit on the original time frame, it's less time consuming. But like I said, this is totally up to you. In the future, I might make a video where I will go on a lower time frame and look for a refined entry to show you guys how I would do that. But till then, make sure you are subscribed to not miss out on any future uploads. If you enjoyed this video, please let me know down below. If there's any questions, again, let me know down below. And I would really appreciate if you guys would like and share the video. And till next time, a very cool video on market structure will pop on the screen right now. So feel free to go ahead and check it out. Take care.